And this is my Venom model. Now, if you're new, you don't know what my Venom model is, I only taught it introductorily. I just coined that term if it's not real. I'm not sure if it is, but if it isn't, I got dibs on it. The way it works is, first you have to know what you're looking for. In this case, higher prices. Why? Because it's been dropped all day long. And here is your sell side liquidity. I have a video tutorial on this, so you can go back and watch it. But there's sell side here, and they drop it down through the low, but they do it with a SIBI, sell sign of balance, buy sign of efficiency. Then they do a few candles down here, and then they send it ripping right back up. And that single candle going back above that low is a BISI. So we have a strong one-sided candle going down to take the liquidity, a couple candles left underneath that low to absorb all the sell stops for accumulation purposes, and then they displace it higher. This is the two fangs that make up that model I call Venom. And they're injecting the venom into these sell stops. So fang 1, fang 2, then leads. Okay? So I don't want to kill the joy of watching the Venom video that's on my YouTube channel. This is not all there is to Venom. There's a lot of other things that I'll have in a book format, because I know some of you are already rushing to put something together and sell it on Amazon. And it's going to be wrong if you do, I promise you. And I'll probably go into your comment section and leave a review and tell them, don't look at your stuff because it's garbage. So don't let me go to that extreme, because I will. I'd like to do those types of stuff. There's a guy out there, John Fibolotti. He tried that show. And yeah, hello. Right, so I'm looking for a entry before this candle's high is taken out. I want to be buying. Now, there's two ways you can do it. You can do it as a buy on a stop. So a buy stop, this candlestick's high. You can buy it that way. Or if you're trying to keep a tighter stop loss, you can be buying at this candlestick's open or less. Okay, so it's a power 3 type of entry model. So opening price comes in at 19,174 even. So you can put a limit order in. As soon as this candlestick closes and you open a new one, the limit order goes in at this candlestick's opening price at 19,174.00. You put the limit order in, and in this candlestick here, you'll see that I got filled there, and you can see that there. See that? Look real close right in here. I'll try to zoom the video in. There is that little caret symbol that tells you where the actual fill is, and there's the numerical value. Now the stop loss on that trade is this BISI. And if you look at where I have the fib, see the lower anchored point and the higher anchor point. Those two reference points, and that's what this level is here. Consequent encroachment of that stop loss has to be just below that. Why? Because this Venom model is a balanced price range, and it should not come back down here. If it does, it's not a Venom, and it's probably going to be a wrong trade. Okay, I'm not going to be profitable if it goes down to consequent encroachment or less than. So I can put a stop loss just below that and feel confident that it's okay. And the market daily dies around in here and then sends it higher. Now, as I was watching this, I'm smiling to myself because I know it's going to go up here and take that out. But I forgot that I was only supposed to be taking trades with 30 in the morning, 20 in the afternoon. So I lost sight of everything. I got punch drunk because I was watching a live streamer in their chat window and whatnot. So I just collapsed the trade there and was content with that. There's no real reason for anything except for I didn't follow what I was setting out to do, and I was wanting to showcase to you all here. So this is me not following the outline I set for all of you, but still, nonetheless, it's still fun to see it. And ultimately, it goes above the 19,300 and these highs in here. It comes back down in, reaccumulates. And all of this is occurring also around the opening range gap low of the 25th. Note that. So there's several things there. We have a market maker buy model. Okay. And I'm buying at the low risk buy. And you could have done accumulation, reaccumulation, and then send it up there like that. That would have been wonderful for a market maker buy model. And then it continues actually going higher. And you can see it rips through that old volume imbalance on the daily chart after using the old opening range gap of the 25th. And then watch what happens here. We trade back down into that opening range gap, but look at the body. See that right there? I love seeing that. It's telling you that, okay, we stopped here. The next candle should go bullish. It opens slightly below it and then quickly rejects it, takes the buy side. Look at these candles here. See how smooth they are? Where there's smooth price action, it becomes jagged. It rips through it here. Next buy side is here. It pummels that rather. And we have this consolidation in here. And they pump it right up into new week opening gap for this week. Lots of price action delivery in here. Consequent encroachment. Look at the bodies. That's so beautiful.